Hi, this is Michael Talis with the Talis team. The interest rates are on the rise. The mortgage interest rates actually doubled since the beginning of the year, according to Freddie Mac weekly market rate survey. And the Feds bumped their interest rate by 0.75% or 75 basis points. So last time we sat down with Sue. Sue, welcome to my program.
Good morning, Michael.
About 3 months ago, when the interest rates definitely didn't jump that high. And I think it's the right time to pick Sue's brain and figure out what's going on with the interest rates and what should you expect if you're applying for a mortgage. Sue, why won't you introduce yourself?
Oh, good morning. I'm Sue Baker-Dirickson. I am a senior loan officer with Guaranteed Rate Affinity.
All right. And just to repeat what you were saying last time, you are doing that for how long?
I have been in the business for 36 years, and all of it 100% in California, primarily in Northern California.
Yeah, so you have a lot of experience. The first question I have that the interest rates definitely will affect the behavior of your clients. So what do you see in your practice? What people are asking about, and what do they do different from what was happening, let's say, at the end of last year?
I think the biggest change is that we need to make sure that someone's pre-approval is very, very current. And I would say that means that your pre-approval, you should be checking in with your loan officer probably once a week because interest rates have moved that quickly. So you want to make sure that your pre-approval is still good at whatever the increased interest rate is, since lenders aren't able to lock the rate for you until you have an offer that's been accepted by the seller.
Would you recommend to rush with the lock, or is there still space to, let's say, shop for an interest rate after you lock? I mean, after your offer is accepted?
I think it's risky right now to not lock right away. We've never seen interest rates increase this much in such a short period of time. So it's almost like you need to shop while you're negotiating your offer, not after it's accepted. Because once it's accepted, you should lock right away just to protect yourself.
Right. That makes sense. So with interest rates on the rise, we would expect that some buyers will be priced out of the market. At least we don't see any significant price drops in the latest statistics. The April numbers are almost, or I mean, May numbers are almost the same as April. So if someone needs to buy a home right now, what would you recommend in terms of the plan, how people can boost their buying power?
I would say the biggest shift that we're seeing as a result of interest rates going up is people considering maybe taking an adjustable rate mortgage. Someone that previously was, wanted a 30-year fix because we were, at historic lows, may now want to look at doing something, a hybrid type of an adjustable. Maybe the rate's fixed for 7 years, then we'll adjust every 6 months after that, or 10 years adjusting after that. It gets the interest rate down. Maybe it won't have as much effect on their ability to qualify.
Right. So in terms of like 5, 10, 7 years, which one provides the best interest rate?
Okay, so a 5-year interest rate will be slightly lower than about an eighth of a percent lower than a 7-year. However, in most cases, that is the most difficult loan to qualify for. And that's because a lender doesn't qualify you based on that starting rate. They qualify you based on 2% above that starting rate. If you have a longer term adjustable, say a 7-year or a 10-year, in those cases, you qualify at the starting interest rate.
So do you see 15-year ARM loans or?
No, there were a few around, say maybe toward the end of last year, but the interest rates on those then became equal to, or in some cases even higher than a 30-year fix, basically because there was no market for them on the secondary. So the 10-year right now saves you only about 0.25% from a 30-year. A 7-year ARM is about 0.5% lower than a 30-year fixed. But it still helps.
Right. Yeah, it's interesting because in Freddie Mac survey, they show 15-year on the survey, 15-year fix.
That's a 15-year fix that Freddie Mac shows. The other thing to keep in mind when you're looking at those rates that Fannie and Freddie post in the weeklies, they're all posted at a 1-point cost to the borrower, not at a 0-point cost. So something to keep in mind.
So from the last week, what I saw was 5.78 for the 30-year fixed. if you would be pricing somebody right now, what would be your interest rate level?
Okay, so those prices that you're seeing when Fannie and Freddie price are conforming loan amounts.
Oh,
And like I said, that would be at one point. The also thing to keep in mind though, at this point in time, interest rates on a jumbo fixed rate loan in some instances are lower than they are on a conforming loan amount. Now you can do a jumbo loan anytime the loan exceeds what the standard conforming loan amount is, which is 620,800. It's just that the underwriting criteria when you go into jumbo pricing is a little bit more stringent. You have to have a higher credit score, you have to have higher cash reserves. Where if you're in the up to the jumbo conforming amount, which will cover you to 970,800, you can get in most cases without having to have any cash reserve.
oh,
And they'll work with lower credit scores.
huh. That's interesting. So basically talk to your lender and verify every single
Right.
kind of run every decision tree by your lender to figure out what's the
I
best
was
for you.
pricing a jumbo loan just this morning on a 30-year fix, and it was 5.25 at no points.
Oh,
So
so it's
the spread is
significantly
huge
better.
right now. It is.
Yeah, significantly better. So do you see that since last week, the rates are starting to kind of tilt downward, or they're
No,
still
I would say the rates since the Fed, okay, so the Fed release was Wednesday. And
right?
since then, the market really knew it was coming. So it was already priced in for interest rates. So I would say for the most part, interest rates the last couple of days have been stable. But like you said, since the end of last year, we've doubled.
Right, but just last week we saw what almost 0.5% jump in 1 week based on this Freddie Mac survey, and that was
Well, that even started earlier in the week last week because the thought process went from, no, the Feds are only going to raise a half. So
oh
when the inflation came in so high that previous Friday, the forecast then jumped to the 0.75 basis points,
oh
which
that makes
on
sense
Friday
because
was 0.50.
so 0.5 percentage point increase in Feds was priced in, but not 0.75, and
Correct.
that's what jumped it. So I understand that the lenders are also coming up with new programs to help buyers, and tell me about that.
Okay. So if you're talking about conforming loan amounts, so the Fannie Freddie up to the 970,800 in our area, we're in a high cost area here in the Bay Area. If you're outside of the Bay Area, the limits may be different. So do check what's local. But they just announced some programs with 3% down. They also offered some programs with down payment assistance, closing cost assistance. However, those have sales price restrictions on them and income restrictions both. So in those cases, the first thing is most cases you have to be 80% of what median income is in your area to qualify for those down payment assistance programs.
Oh, well, in our areas, it should be pretty high number comparing to some other
compared to other places. That's right.
parts of the country or even state.
The other programs that have become very popular, especially if you're in the jumbo market, because a lot of people's money is tied up in the stock market, and this might not be a good time for them to sell their stocks, would be something to let them in with in a down payment with 10% as opposed to the standard 20. And so those programs are out there. We do an 80% first and a 10% second. They avoid PMI that way, and they're able to get in with a lower down payment up to a purchase price of $2 million.
So $2 million will be a cutoff for that program. So, and what I understand that if rates are kind of normalize or get lower at some point, they can also refinance it.
Right. You can refinance anytime. The regulations for any prepayment penalties on owner-occupied homes were outlawed several years back. So you can refinance whenever it's to your benefit to do so.
In terms of the future, where do you see the rates going? Do you have any?
Well, I mean, at this
where's
point,
your crystal ball?
We have increases coming. I mean, you know, Chairman Powell has already told us that. So I think the sooner you buy, the better. The rates are going to go up. We'll see what happens if we go into a recession. If we do, housing has always held up well, and interest rates tend to drop. So there could be opportunities for people buying now, maybe to refinance in the future if that happens. But we have to remember, we're buying a home When we invest in real estate, we're building wealth. We're not talking about stock when we're buying a home.
Right. Yeah, I always tell my clients that the buying criteria is how long are you planning to stay in that house. If that's anywhere under 5 years or even under 7 years, it's probably less risky to rent. It may be not, well, depending on where the market will go. So that's kind of the criteria, long-term ownership. That's what we typically recommend. So I understand that there is a lot of people who negotiated their contracts and are committed to buying, and there is a lot of non-contingent offers in our area. So have you seen any situations where people were not able to close because of this interest rate jump?
I have not experienced that at all. I have heard from clients that I work with, other realtors that, and you probably have too, that maybe in some cases things were delayed because they had to change loan programs or they had to switch lenders. But I have not heard of anybody turning around and having to cancel a contract for any reason like that.
Yeah, well, we're talking about what happened during a transaction. My understanding is that when the contract is ratified and you're working with the lender will lock the interest rate.
They want your approval, of course, to lock the interest rate, but yes, that is typically what we do, lock, especially in the marketplace that we've been in 2022. We've been recommending locking right away.
Right away. So what will happen even short term if the interest rate will take a dive and I don't know, maybe any specific week, how lenders will handle that and whether or not there is any chance to lower your interest rate while you are in the escrow?
There is a possibility, and every lender will have a different policy for how they negotiate interest rates if they come down. My experience is typically rates need to drop at least 0.25% before the lender wants to discuss potentially lowering the rate that you locked in. And usually when they do that, they'll kind of meet you halfway. They're not going to take you all the way down, but they're going to meet you halfway. But the other thing to keep in mind when we're going through any type of renegotiation, that we do it probably before you get within 10 days of your close of escrow, because making a change to the interest rate could require additional disclosures be issued by the lender. And sometimes there's time frames. So if we have to issue new disclosures, it could delay you 3 days from ordering loan documents, those type of things.
Yeah, makes sense. This 3-day, I think it was, what was the name of that bill? It was right after 2008 crash.
Right.
That's
Yeah.
when they required
We
it.
had the new disclosures came out. There was a lot of safe harbor built in. So we have to issue what's called the closing disclosure within 3 days of signing the loan documents. Now that's usually fine as far as time goes. But if we've issued one and the interest rates change by more than 0.125%, we're required to issue it again.
Got it. Oh, so, but if it's a minor change, it's
If it
still
doesn't
acceptable.
affect the APR, the annual percentage rate on a loan, by more than 0.125%, a lender's not required to redisclose. But if you're going to just renegotiate, and like we talked about in our instance, we're going down 0.125%, the APR has
triggers.
changed. So there you go.
It triggers.
Yes.
Right. And what about the refinances? Do you see any happening right now, or this business is kind of dead, at least
The
from the beginning?
refinances have pretty much dried up right now. And so unless someone's refinancing maybe to do a large home improvement or something like that, we're not doing many refinances at all.
Home equity lines?
Home equity lines, I'm not doing a whole lot of that, only because on the programs that we do, the only time I can offer a home equity line of credit is at the time someone's purchasing a home. But the reason people are kind of steering away from home equity lines right now is they get an immediate impact by the increases in the Fed's rate, because they're all adjustable on a floating basis. So when anybody that had a HELOC out, when the Fed's raised the rate 0.75 point last week, when they get their statement next month, their rate's up 0.75%. And if they're going to do this several more times this year, that makes those loans fairly expensive.
Huh. Yeah, I never thought about it. I'm thinking about purchase money loans more than anything else. In terms of the crystal ball, again, I'm thinking about immediate interest rate increases because they're kind of promised by Feds. What would you think will happen with the interest rates in about a year, 2, 3? Do you have any feel for?
Well,
Because what I'm looking at, I'm looking at Freddie Mac's
Mhm.
chart, and you see that after an increase, there is always some kind of a decrease,
Right.
and the general tendency, if you look from like 80s till today, or till the end of 2021, it was generally direction down, and then
Mhm.
we have this dramatic
Right.
increase. So this whatever 30 years or 40 years of history, what did it teach us?
Well, I would say, I mean, if we look at historically how interest rates react, they typically seem to cycle in a 7-year window.
Oh,
So we're up for a couple and then down. Well, we're just starting that upside.
I
Now,
see.
we may see this plateau sooner because things are a little bit different here. Rates are going to go up quickly. So it all depends on if we're able to stay away from a recession or have a very mild recession. Then we may not see a huge impact on rates. But if we go in, the deeper the recession, the more of a positive impact it will have on interest rates because they tend to typically drop during that time.
Got it. So people who are now at whatever 6% interest rate, they probably should hope for a recession, right? No,
Yeah.
I'm kidding. There are bigger
As long as
impacts
they
on
can
our
keep their
life.
job, it's okay, right?
Yeah, yeah. Well, you remember that phrase that it's a recession if somebody else has lost their job, and it's a depression if you lose your job. So,
Exactly.
so the difference between the recession and the depression.
Right.
Anyways, so I'll repeat my question from the previous time. How soon do you want to talk to people in terms of their buying process? When do you want to start talking to a lender if you're thinking about buying a home?
I think as soon as you're seriously considering it, you need to speak with a lender, even maybe to do a pre-qualification. You don't even have to maybe run credit report at that time, but
Hmm.
at least give yourself an idea of what the price point is and what it looks like to you. You need to, what I typically do is I do a pre-qualification. I have people verbally let me know what's their income,
Hmm.
what do they have in for of debt, how much money do we have to use for a down payment, and I'll put together scenarios and I'll email it to them. Because where a lender qualifies you and where you're comfortable may or may not be the same place.
Right.
So if you look at this and you say, okay, oh yeah, no, I don't want a payment there, then someone can tell me, okay, my comfort level is at this dollar amount. And I'll rework those figures to get into their comfort zone. Then they can talk to a realtor and say, what, can I find what I want? Can I work
Right.
with this?
Right. And the other thing that I heard from you and other people that if you do any kind of financial moves, opening credit cards, buying cars, or whatever, getting any kind of loan, even for, I don't know, washer dryer, if you're buying a large appliance, may affect your ability to buy, and you
Well,
need to
because
run
it
it
will
by your
affect your
lender.
credit. And so that's something really important to keep in mind. You really don't want any new accounts, I would say within 6 months of being able to
Oh,
buy a home. Anytime you open a new account, even if you have good credit, it will slightly drop your credit score until you have a history rating now on that new account. And the other thing, if they see a lot of inquiries, then they're thinking, oh, wow, are they considering going to buying something? And those things will have a negative effect on your credit score. So you want to limit that. However, when you get to the point that you want to do a pre-approval,
hmm.
and a lender at that point will run your credit, the one thing also to keep in mind, if you're going to do multiple pre-approvals, which
Hmm.
obviously I would prefer you don't, but if you do, you want to
Well,
do
people
within a
shop
30-day
around.
window, right? If you do within a 30-day window, that is only one hit to your credit score. If you
Got
do
it.
it 35 days, now that's a second one.
Yeah, it makes sense. People want to shop around and figure out what's the best deal for them.
Right.
And that's how it works. If people want to talk to you, what will be the best way to get hold of you?
Okay, you can reach me either by email, which my email address is susan.dirickson at grarate.com. And Dirickson is Dirickson.
I'll post it in the comments. So if
Okay, and you
anybody
can
needs
always,
help,
always reach me on my office phone. It rings to my cell. That's 408-861-8866. And I work 7 days a week, so you can reach me anytime you need.
well, don't say 24/7, otherwise people will abuse it. Yeah. So, well, thank you, Sue. I really appreciate your time. What I would like to do is maybe set up a kind of a tradition. We should meet once a quarter and do a review of what's going on and what to expect in the mortgage space.
Sounds great. I always love the opportunity to talk to you, Michael. So I'll be
Thank
open
you.
to it anytime you're ready.
Yeah, thank you.